Good morning, everyone. This is Travis Witherspoon from Carter Cow Capital, helping you fight for your financial freedom throughout the Forex market. This is a live session of Trade with Travis. Typically, we end up doing this right around 9 a.m., but because of some of the stuff that I have to do a little bit later on today, we end up getting it done a little bit earlier. Going to end up talking about some overall game plans, looking at some actual trades. I'm actually in a couple trades right now as we speak. I'm going to talk about those and I'll post those out as ideas as well. But let's go ahead and get started. I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education. And from the education, you can be able to make your own informed decision. I understand that forex trading involves risk. It involves risk of being able to make money. Also involves risk of being able to lose money. So please keep that in mind and understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it is not promised that you're going to end up making money today. So with that being said, for the people that are going to end up watching this live, thank you for being able to pay attention to it. If you would, if you're interested in being able to learn a little bit more information about what I end up doing from a trade perspective, you can go to cartercowcapital.com/start here, which is actually in the live chat section. If you end up taking a look at that, you can be able to see exactly what we have going on when it comes down to that. I am going to end up moving very quickly because there's a lot of movement that's actually starting to happen. I'm starting to see some of these pocket trades actually start to show up. A little bit later on today, we're going to end up doing our first mini session, being able to find explosive trades. We're going to end up talking about buying profile, why it's very important when it comes down to being able to trade. How can you be able to use it to your benefit? But a couple things have happened early this morning. One, Bitcoin has failed all the way down to 20,000. I think it started to pop up just a little bit. Look at what's going on today. We just had climate count change and everything else like that from the pounds. But I don't want to start there. I actually want to start on NAS 100 and be able to take a look at it. Remember, we ended up talking about this trade. We ended up talking about this trade last week and for the last, and even on Sunday, I ended up talking about the strength of how this market is going to end up moving. And because it has a pocket area of being able to get in, you can be able to take advantage and being able to get a huge amount points based off of this movement. So I'm going to briefly talk about it this real quick, and then after that, tell you the trade that I just got into. So from a weekly perspective, this market is moving down. There's a D extension that's expected to be at 10,700. Everything is showing from a trend standpoint that the market is bearish and we're in an R3 zone, which means that we're in a push area for the market to be able to push down to the downside. We take a look at this from a daily perspective. We can see that we have a counter trend line break that ended up happening a few days ago, and this market is moving down. And more importantly, when you end up taking a look at the volume profile, you can see that we have left a high volume node and actually started moving to a low volume node when it comes down to this pocket area. Now, keep this in mind. The first take profit is going to end up being at 10,770. But if you end up looking at this overall area, if this market falls down inside of this pocket area, this market is going to end up flushing very fast. And that's been the thing that I have been talking about for a very long time. Seeing this market get down to 10,700, and then after that, see the market kind of move from there. So I actually ended up getting into 3 sell trades at this particular point already. I got into it at 11,417, 11,406, and 11,358, respectively, when it comes down to the movements. So let's talk about how you can be able to benefit from this trade if you are interested in being able to get in. And being able to go from there. Let's take a look at it at a 2-hour perspective for the people that are online live. Make sure that you end up dropping by and saying, hey, always good to be able to talk to you. I know this is, I typically don't do this. Well, now we're doing this in the morning, but typically we've been doing this on Sundays and Wednesdays. So be prepared to look at this grill each and every day moving forward until the middle portion of August. But essentially what we have is this. We can clearly see that this market ended up having a counter trend line break to the downside. Currently, right now, we're seeing that this market is kind of reacting with this trend line as well to the downside overall. Now, if it remains to be below this overall trend line, then that means that the market's going to end up being bearish, and we should expect that the market should keep on moving. The point of control was at 11,416. That's the reason why I got into the trade at 11,417. Obviously, this market hasn't had a strong retracement to the upside, but we're seeing a lot of low volume when it comes down to people actually being able to get in this trade for selling. So it doesn't. So I don't think that there's going to end up being a lot of buyers or a lot of interest of people trying to get in off of this move. So what I ended up doing, literally, I want to say about 10 minutes before we got in, was that, or not 10 minutes. I ended up getting into this a little bit earlier today. I ended up getting into the trade based off this counter trend line break that ended up happening right here. which was at 11,416. Currently, right now, the market has found a little bit of support and basically started to push up. And there is a mini counter trend line break that is happening to the upside, and there's a retest that's actually happening. Now, if this market remains to be above this retest line, I would say don't look at being able to get in until it actually truly breaks to the downside. For the people that want to be a little bit more conservative, I would say wait until the market actually ends up breaking the overall lows at 11,325 if you want to be able to do it like that. Me personally, I've gotten in based off of I've gotten in on this sale based off of three things. One, because we know that this pocket area is going to end up going to the downside. This pocket area has a lot of openings all the way down to 10,700, and that D extension has not been completed yet. So, like I said, I have gotten into this trade at 11,417, 11,406, and 11,358 this morning. So currently, right now, I am up on the pairs that are past 11,417, and I'm down on the one that's at 11,358. Swallow, what's going on? What about crude oil? We're going to we'll take a look at that because typically we go to the big three. I just wanted to make sure that everybody had a opportunity to be able to take a look at NOS 100 because that's one of the first trades that I ended up taking earlier today. So once again, if you have not got in on NOS 100, I would do two things. One, we do have a counter trend line break, and typically when the market ends up breaking out, there will end up being a retest, right? So if you don't feel comfortable with being able to get in right now, wait for the 15 minutes to be able to get into the sell zone. And then after that, look for a counter trend line break to the downside and be able to go from there. If it breaks above these highs at 517, then I do expect that this market may end up pushing up towards the 847 area before actually starting to push back down. But ultimately, I do think that sales and being a part of sales are probably going to end up being the best move overall. Let's get into the big three real quick. Type in a wild yes if that makes sense. I will send that idea out onto the script. Out to the idea page so everybody can be able to take a look at that and we'll be able to go through that. But just want to make sure everybody got that. United States dollar index. I'm going to go United States dollar index, then oil, then gold. I do that every week. I just want to make sure that everybody kind of understands that for the people that have not been watching this before. All right. So from a weekly standpoint, market has pushed up on United States dollar index, completed the extension, started to be able to break to the upside and gapped up earlier this week. There is a D extension from a daily perspective that's expected to be at 13,168. Analyze GU and gold. We'll do. Um, because the market only retraced down to the 23.6, I do expect that this market is going to end up having a little bit of a hesitation once it ends up getting up to 12,945. Currently, right now, the market's at 12,913. So I do think that the market still has a little bit of a up push that could happen for the people that are scalping the market or have been in this market for a few days. Congratulations when it comes down to that movement. But I do think that the market will kind of slow down at 12,945. Currently, right now, I'm not in the move. But if you're looking at U.S. based pairs, I would say look at more scalping opportunities from the United States dollar standpoint. Once again, I say scalping now, not swing trading, because I think that the move is a little bit overextended. Obviously, we can see the stock actually being in the sell zone. Okay, let's take a look at oil. I have been bullish on oil. So I've been bullish on oil since it was at $67 a barrel. We take a look at this from a weekly perspective. Give it this ABCD stuff. Currently, right now, market is in a R2 ranking. Broke down, got out of this consolidation, started to push up. There's this expectation that the market will end up going up to 171.23 for its overall movement. So the weekly is to the upside. We take a look at it from a daily perspective. The market has broken out of consolidation. We talked about three different areas going past the last 2 weeks of overall movement. The first one was the triangle that we end up seeing breaking up to the upside for people that end up getting in from there. We talked about when the market ended up breaking out of this overall consolidation zone and retesting and being able to get in. And then after that, currently we end up talking about, okay, well, if there's another counter trend line break to be able to get in, currently as we are looking at, that may be another area to be able to get in for us being able to buy. So this is another opportunity for people that have not gotten into oil to actually start looking at being able to get into oil from that standpoint. Now, I don't think I was up to be able to see this strong bullish engulfing candlestick, but I would look at, once again, taking a look at the 15-minute at this particular point and seeing if you could be able to scout the market while the market is actually moving up to 171. Let me go back and take a look at this from a 2 hour perspective one more time. Daily. Let's see. Okay, let's see right here. Anybody in oil currently right now? Is anybody in oil? Currently right now, I am out of oil. I took profit a while ago. Let's see. Okay, those fields are broken. Let's go to these fields right here. Okay, so if you're looking at just being able to scalp, um, if you're looking at just being able to scalp the market, the next stopping area will be at 128.24. Um, from a 2 hour perspective, the market is a little bit overextended. Hopefully, we don't end up seeing something like I don't think it'll be a triple top because it's not showing any type of movement like that. But we are seeing a little bit of resistance, just slightly, just a little bit of resistance right around this area. Um, but I don't think that. I mean, obviously, if it breaks past that point, then we'll be fine. The only thing that I'm worried about, if you're already in the trade, that's great. Depending on where your stop loss is, I will make sure that my stop loss is below. I make sure that my stop loss is below that natural support that's been happening right there, right around 117. Anything below 117, I think you'll end up being okay. Anything below the actual swing low is actually even better, which is right around 111.91. So if you're below those positions, then I think that you're in a very good position being able to manage this trade. Um, but from a 2 hour perspective, I would say if you're looking at being able to take a little bit of profit, I would say look at 128.24 as the next stopping area for being able to take profit. If you're not in the trade, I will wait for the market to be able to have a little bit of a retracement, kind of like what we ended up looking at before, and then trying to see if this market can be able to pop up to the upside from there. So if you are in a buy trade, this manage the trade, this allow the market to be able to move. Understand that because we are a little bit overbought, that this market may have a little bit of a retracement. If you want to take a little bit off the table, then I would say that would probably be the best thing to be able to do. But I would still stay in on the trade and allow it to be able to do its thing. Let's take a look at gold. Hopefully that makes sense. So I was kind of disappointed in gold in the way that it actually ended up moving because we talked about buying on this actual trade. I had to get out of it once it broke the resistance of that consolidation area. I still do expect that gold is going to end up getting up to $2,000 a barrel. I mean, $2,000 an ounce. Oh, it may just take a little bit more time right now, currently. Um, oh, you're welcome. Um, Currently, right now, what has happened is this. From a weekly perspective, this market made an ABCD swing, fell all the way down to the 786, broke up to the upside. Remember, when the market breaks a inner trend line, it gravitates towards the outer trend line, and then after that, you will end up having a test. That's exactly what ended up happening. This market ended up breaking the inner trend line, which was right here, gravitate toward the outer trend line, tried to push up and tried to break, and currently right now it is actually rejecting. So if it is rejecting, then that means that this market would be considered to be fully bearish. Now, if it is considered to be fully bearish, let's talk about what is the next steps for that overall movement. I'm still going to have the mindset that it is bullish because I believe that the United States dollar is going to slow down. That's just me personally. Um, but we also got to keep in mind that if with that new information that ends up telling us that the market may end up going in a different direction, then we have to keep that. We have to be mindful of that. Okay, so um, there is a weekly de-extension just from this small movement that I'm looking at right here. Matter of fact, I need to go back some because that is not enough information. Let me get rid of what I just did. Okay, so no, that got broke. Okay, so yeah, we have to go back to this field. Okay, so there is a weekly day extension if this market continues to keep on moving to the downside that will end off at 1778. This market ended up retracing all the way up to the 618, which was at 2001. That was way back when. And then after that, the market has been falling ever since then, and the extensions at 1778. So based off of the new information, based off of how this market has been moving, I would consider that this market is bearish now because of the rejection. Now, because of that, that kind of changes up my mindset of how we end up taking a look at this trade overall. Um, Currently, right now, we end up having consolidation. The market broke out of the consolidation. Remember, whenever there's a breakout, then there will end up being a retest of the overall move. So here was the box consolidation right here around this area. The market ended up going all the way up to resistance, broke through the floor. Currently, right now, it ended up having a slight. It hasn't got all the way up to resistance, but I would consider that to be a retest, and the market has been falling to the downside. So in this standpoint, this goes back to being a scalping move and not a swing trading move. So let's take a look at it from a 2 hour field standpoint. Know that the daily D extensions at 1778. We take a look at the 2 hour fibs. The 2 hour fibs telling us that it's at 1773. So okay, so there we go. 1778 will end up being the take profit area if you are looking at being able to scalp this market. Um, or if you are looking at swing trade in this market, if you're looking at scalping this market, then obviously you will take trades along the way. But there is a counter trend line break. There's a counter trend line break to be able to pay attention to. The market has had a strong U-turn. It's not in the sell zone as of yet, but it is somewhat overbought, being at 73%. Um, so if you are looking at being able to sell, in this case, I am still in my buy trades. Well, I'm still in one buy trade. Um, So I might have to manage that one a little bit more. I might have to look at being able to get out of that one and just eat it. But um, stop loss, I will place above the swing high. The swing high on this move was at 1831. I will place let's see. I would not want to place my stop loss just at the support because the market hasn't fully completed the retest because it didn't go all the way up. So I will place my stop loss actually inside of this actual consolidation area, right around the midpoint. Um, let's see. At this point, I don't know if that's even worth it. If we're looking at risk versus reward. 481 pips, 359. That's not going to work. Okay, so if you're going to do it, then that means that you're going to have to place it above the swing high if you're looking at it from a risk reward standpoint. Um, Stop loss, I'll go 18. I'll go 1836, which is 147 pips going after 468, which will be the 1778 area, which is also the daily D extension of which that confluence. I'll play ball. I'll take that trade. Let's see. I'll take that trade and hopefully be able to hedge it a little bit. Let's go into the FMA. You're not familiar with the FMA. The FMA for my group is called the Forex Money Advisor. What it does is that it allows you to be able to place in all of the information that is being given to you when it comes down to a trade, and be able to spit out a probability of success on if you end up taking that trade right now, what will be the chances of you actually being able to make money off of it? All right, so this is how it works on weekly. Okay, so weekly, we're looking at this small subfield. Um, we're not looking at the overall long term movements. I'm just looking at the small subfield at this point. So just keep that in mind. Uh, this market, from a down perspective, is in a R3 position because it's past the B based off of this subfield. So weekly, place that in into R3. Um, where did it go? Where did it go? Where did it go? Daily is pushing to the downside as well. Um, daily is at a R2. Finally, just broke out of consolidation. Entry rank will be a R2. Now, is a stochastic in the sell zone? That answer would be no. Is there a counter trend line break? The answer is yes. How much risk do we have? The risk that we ended up talking about was 146. 146 compared to 438, I believe. Yeah, 146 compared to 438. Let's say if you end up, I'm just saying $10,000 for the account, just to be able to make up something. But if you have $10,000 in your account, you're going after this. This is in a R3 area because it is in an R3 area. I'm probably going to stay with 3% of the account size. I'm risking $300 to be able to go after $900. That means that I can be able to have my lot size at point. Um, I can be able to have my lot size at 2.0, which is basically too many lots to be able to take that trade. So that's what I'm going to end up doing. I'm going to plug that in on my. I'm going to plug that in my system. Just give me 1 second, and we'll go from there. Any questions about that while I'm doing this? I'm not able to see y'all on this while I'm doing that, but any questions on that? Let's see. Stop loss was 1836. Take profit 1778. Right, there we go. I am in. I am in on that trade, and we end up going from there. I will post this out as an idea for everyone to be able to see. I do it on Trading View so everybody can be able to see it from there, and that'll be it from that. I got a little bit of time to be able to go over another trade. We haven't went through GU. Let me go and take a look at pound United States dollar. So before on Sunday, we ended up talking about this. Um, and I said a couple things. One, I felt like this market was falling to a natural support area. We've seen this long-term consolidation. From a weekly perspective, we said that the resistance is at 142, the support was at 120. Currently, right now, we was in the middle of that area. I also end up saying that I like the Euro United States dollar better than pound United States dollar because the Euro United States dollar was actually out of that consolidation area. Um, Pound United States dollar just went through climate count. They end up having negative numbers. That is a strong indication that this market continues or would continue to be able to fall. There's a weekly D extension that's expected to be at basically parity. I don't expect that the market will fall down to that area, but I didn't expect that. Well, I did expect that Bitcoin was going to fall down to 20,000, but I don't expect that Bitcoin is going to fall even lower than that. So the market is starting to really kind of change and kind of swing in a direction. We take a look at this from a daily perspective. This market is in a R3 perspective. We end up having a strong day yesterday for the people that end up getting in off of that yesterday or 2 days before. Currently, right now, all that is left when it comes down to this position is this the extension that's about 218 pips away. Um, what I would look at, going back to what I ended up saying before, take a look at the 2 hours, see if you can be able to get in. Currently, right now, it is in the sell zone. Um, we're going after 200. If we're going to have 218 pips, then that means that your stop loss have to be just above the last swing high, and that'll be nothing more than a scalp. So it had to be above 122. The question is, does that risk reward make sense to be able to take it? 149 for 222 does not work for me. So I'm not taking that trade. But if you are in and you got in yesterday, then ride it out, keep your equity management right, and then after that, stay in it from there. But I still do believe that the market is to the downside. Obviously, 8:30 has already happened. The 9:30 session has not started yet, so I won't be here to be able to live that live with y'all. But my mindsets are pretty much the same. I think that everything is still bearish, and I think that if we do get any type of a bullish push, I'm going to say this over again. If we get any type of a bullish push, I think that that bullish push will only be temporary, and then after that, you'll start to see the move start to happen again. Okay, so just keep that in mind. If you like what we end up doing, please make sure that you end up liking the Carter Cow Capital business page or Carter Cow Capital page from here. We're over 450 subscribers on the road to 500. Going to keep on pushing from there. If you're interested in being able to go through one of our free webinars that we end up having, you can go to cartercowcapital.com/start here. I'm going to place that inside of the chat box again. We have boot camps and everything else that are actually starting that already are in the mix right now. So if you're interested in being able to get into next week's boot camp, this would be a great time to be able to start taking a look at that information. Also, if you're interested in being able to get into our master classes or be able to see what we're doing from a automation system perspective, this would be a great time to be able to get into those areas as well. Been killing it since March, and super excited for everyone to be able to go from there. All right. Like always, make sure that you end up planning your trade your plan. Everyone, I see each and every one of y'all again tomorrow. Take it easy.